What is up, everybody? Welcome to the latest edition of the Bitcoin Mining Stock Show live stream. I'm your host, editor in chief of Blockspace Media, Colin Harper. Today, we have an awesome show lined up with Sam Tabar, CEO of BitDigital. He's going to be talking a little bit about their self mining strategy going forward after the halving, as well as touching heavily on the company's burgeoning HPC and AI strategy, which netted them the largest revenue of any AI focused miner in Q2. So without further ado, I'd welcome Sam to the stage. Sam, how we doing today, man? Thanks for taking the time.
Thanks for having me on the show.
Yeah, absolutely. I know you're busy. We're going to try to keep this one clean at 30 minutes or so. So, kind of just to kick it off, y'all entered the mining game in Q1 of 2020. One of the entrants in that the last bull market and that crop of new miners that we saw come up. What have been some of the biggest changes that y'all have seen from your side as we enter the fourth halving epoch?
There have been halvings since. I think miners are forced to diversify their revenue streams to stay competitive and profitable. These halvings, they take your margin overnight, 50%. As someone running a public listed company, I have to think about shareholder value. I'm not a Bitcoin Maximus shareholder value maxi. And I need to put capital in businesses that make money for shareholders and not just hope that Bitcoin goes up. We do have a Bitcoin mining fleet. I feel very strongly that Bitcoin will go up in the long term, but I don't want to lie to anybody and say it's going to go up all the time. There are going to be a lot of cyclical gyrations. And, although I do believe in the long-term structural bull case, there's going to be a hell of a lot of cyclical gyrations. And I don't want to run a business based on hope. I don't want to just hope that Bitcoin goes up so that my company does well. And I wanted to be in a position where BitDigital, with our Bitcoin mining fleet, if Bitcoin goes up, that's great, or like a call option on Bitcoin. But if Bitcoin doesn't go up, or if it goes sideways, or if it goes down, I want us to flourish. And we managed to crack that code. We have an extremely lucrative HPC business, AI business, AI, HPC, same thing. And Bitcoin would have to more than double where it is today to even approach the margins that we're getting on the HPC side. And there's no halving in HPC. There's no halving event in AI. So we've basically leveraged our skill set as Bitcoin miners. And what is that skill set? That skill set is procuring specialized machines, identifying the correct data centers, and we have clients. Because if you don't have all three of those things, you just have an aspiration. You don't have a business. And we have all three. We have business, we have clients, we have access to data centers, and we have very specialized relationships with NVIDIA. So for example, we have a formalized relationships. We're in their partner network program, which is a program that's not exactly easy to get into. So we have a very accelerated way of getting the equipment on behalf of our clients who are building HPC, AI applications. And I just met with Michael Saylor yesterday. He recommended that miners buy Bitcoin. That's what he said to me privately. He said that it's probably a better idea to buy Bitcoin rather than Bitcoin mining equipment. But that's very difficult for a miner to accept, because miners, so much of their equity value is based on being able to produce Bitcoins at below market prices, which is possible sometimes, not every time. And so in order to build an all-season company, I wanted to be positioned as, if Bitcoin goes down, we're flourishing, and if Bitcoin goes up, even better. So we're kind of a Bitcoin call option. And so right now, HPC offers a much better investment opportunity. These margins are very fat, and we have a very pregnant pipeline of customers. The bottleneck has basically been time. We've been our own bottleneck. And we've built this whole business. We have the fastest growing and the biggest business in the sector right now in HPC. And the biggest bottleneck has been ourselves. So I'm really glad that we finally have a sales team that we hired last month. This is a very experienced sales team. They've done this before. We hired them from an incumbent. And so that's going to really unleash a lot of value in getting these other clients across the finish line.
So before we hop all the way into AI considerations, I want to just ask one more question regarding y'all's mining fleet. We've kind of seen over the last year, especially with regards to the halving, some of the asset light miners, most famously Marathon, have moved away from that strategy. They started acquiring sites formerly run by Compute North, and from HUD 8. You still run an asset light strategy at BitDigital. According to your 6K, your all-in power cost is about $47 a megawatt. So 4.7 of a cent. Per kilowatt hour.
Yeah.
So I would just love if you could speak a little bit on that decision to stay asset light, as we've kind of seen other miners move towards an asset heavy.
Yeah, thank goodness. And a lot of shareholders that have been speaking to us are very thankful that we have been remaining an asset light model. I'll explain in a moment. We've never been interested in owning a Bitcoin mining data center. There was a time when BitDigital was all in China many years ago. And we felt that was a jurisdictional risk. And indeed it was. We were able to migrate our entire fleet from China into North America before China announced a Bitcoin mining ban. Imagine we owned the data centers for Bitcoin mining there. That would have been pretty terrible. So we understand the dangers of owning a Bitcoin mining data center politically and jurisdictionally. And frankly, if you do the math, it's just difficult to make the case that growth investment in mining makes a lot of sense. Building or buying infrastructure presents more costs that need to be accounted for when calculating investment return. And I just don't trust the politicians to make the right decisions. And Bitcoin has been a lightning rod in terms of political judgment and regulatory overreach. There was a time when a lot of publicly listed Bitcoin miners, including myself, we were getting letters from Senator Elizabeth Warren asking about the energy uses and so on. And thank goodness we had great answers for the energy uses, because we've always made sure that the data centers that we use are carbon free, not carbon neutral. Carbon neutral is a very different story. But look, our experience in China has made us keenly aware of the value of remaining very nimble. But we do see a very compelling value proposition in owning an HPC data center. That makes a lot of sense. And so we are looking to vertically integrate on the HPC side, and there's a certain wish list that I have to integrate on the vertical on HPC. But vertically integrating in Bitcoin mining, when you don't know where the price of Bitcoin is going to be tomorrow, and you don't have jurisdictional certainty, regulatory clarity, I think that is a fool's errand. So it is much better to remain nimble as a Bitcoin miner, but to vertically integrate as an HPC provider.
So I want to pluck out that thread a little bit. You say that you want to vertically integrate. You're actively looking at opportunities. What does that look like? Does that look like acquiring a data center outright? I know that in the 6K for y'all's second quarter, you discussed evaluating 10 or so data centers across the US and Europe for a potentially $700 million deal with I believe it's Boostroid. Is that the company?
Yeah, so Boostroid, we're gonna be putting the equipment in about 20 data centers, but these are data centers that we do not own. These are data centers we're partnering with.
So in terms of vertical integration, would that be through acquisition? Would that be through from the ground up construction? What do you feel like is the most viable path towards that integration?
Yeah, that's going to be plug and play. We're very interested in owning a data center. We've made our intentions known to the market. Owning our own tier 3 data center would unlock new revenue opportunities for us, such as co-location services and on-demand computing. So we're very interested in vertical integration on the HPC side. There are no political issues. The margins are incredible. You could predict by the cent where we're going to be every month. And these are contracts that are locked in for years. And these are margins that are incredibly high.
But sorry, just to press, and you can tell me that you can't discuss it right now, but what does that vertical integration look like from an operational perspective? How do you How
Yeah.
will you come about acquiring those assets?
Well, I mean, oh, how? Well, we have a very clean balance sheet. We don't have any debt on our balance sheet, zero debt, pristine. We have about $200 million in liquidity. And with respect to what kind of data center, it would have to be in a major metropolitan area. So to have like I've been reading about Bitcoin miners thinking about developing a data center, an HPC data center in West Texas, or remote places, which makes no sense, and I'll explain why. Because currently, for example, right now we're partnered up with a data center in Iceland, and that's doing LLMs, that's doing training, and it's fine to do training for AI in remote places, but AI eventually, in a few years, is going to move towards inference. And inference involves latency issues. So you have to have the data center in major metropolitan areas. It cannot be in remote areas. If it's in remote areas, the shelf life of that HPC data center is very limited because eventually AI is going to go from training to inference. And for inference, you need to have it in cities. So if we were to acquire a data center, it would be in a major metropolitan area because we want to be in the game for inference. Inference is when things are going to get very interesting. We're currently in the training era for AI. When inference happens, it's going to be a really different planet. We're looking forward to that. We're positioning for that by potentially acquiring a data center in major metropolitan areas.
Okay, and just to kind of boil that down into layman's terms, you want to be closer to the customers. You want to make sure that there's no latency in the compute that you're delivering to the people who would potentially be buying it. Correct?
I mean, thank you for saying it much more eloquently than me.
No, that's you. You're using the industry jargon that we need to know. So I appreciate you making that distinction. I want to share
I also want to say one thing that's frustrating me. I see that, not frustrating me, but I just find amusing. I also see that there are Bitcoin miners who are saying that they could repurpose their current operations to HPC. Untrue. You would have to basically strip out over 90% of that mining center, that data, the data center for Bitcoin mining, to repurpose it into an HPC data center. These are not repurposable. You cannot repurpose a Bitcoin mining. It's never been done, and it won't be done into an HPC data center.
So this is an important thing to highlight, I think, as we're kind of, we're still in this early fog,
Yeah, I know.
right, of what this will look
People
like.
are taking advantage of that fog.
So, and to your point, as far as I can tell, there are really kind of four models for how you would skin this cat, at least how it's being advertised by Bitcoin miners. You either acquire a data center outright, you
Yeah.
lease a data center, which is the most popular right now for these companies as they get off the ground with their AI strategies. You
Yes.
retrofit a data center, which, as you just pointed out, is very difficult, and you can't actually use the existing infrastructure to power the HPC and
Correct.
AI computers. Also, there's redundancy issues with regard to power and with regards to networking. And then the other one is just you build one from scratch. I think that last one is going to be the least likely to actually ever be advertised or executed on.
That's right. Because the business opportunity is now. So greenfield development, although it's an option, ideally it's much better to buy an existing site because there's a lot of business and we need it now.
Yeah, and with regards to acquiring versus building up, you're basically looking at, however many years of lead time on actually getting that off the ground, and you're losing maybe 3 or 4 years of opportunity.
So that's not feasible, nor is option 3 to repurpose a Bitcoin mining facility. Not feasible.
So I want to share my screen really quickly and just pull up one of our charts from our AI update that we published a while ago. And this kind of shows people, I think, some of the margins that people were looking at and some of the revenue potential for these AI loads, right? I mean, currently AI loads for all of the Bitcoin miners that I've listed, as far as I can tell, and you can correct me if I'm wrong with regards to BitDigital's, it's like under 20 megawatts, right, of power.
Mm-hmm.
It's
This is correct.
So, and for our viewers on the stream right now, you can see I have profit and cost of revenue for these AI data center or for these AI business lines for all of these miners. And BitDigital is in the lead currently. They booked nearly $8 million of gross profit in Q2. Now, this is from data center this is from data center capacity that is leased to tier 3 data center in Iceland with y'all's initial client or clients. And I just wanted you to kind of go into explaining for me how is this discrepancy here, because at first I thought that the only way that this could be possible is if y'all were booking sales of the computers as part of this revenue, but as I understand, that is not the case. This is fully just from the services rendered.
That's right.
So without giving up too much secret sauce, so to speak, how did BitDigital achieve these margins, because they're incredible compared to the rest of your peers?
We're really good at business.
Yeah, give me a little more than that, Sam.
I mean, our speed of execution has been really remarkable. There are a lot of well-funded AI companies that need speed of execution. We actually won the first piece of business against a hyperscaler. That's true. You heard that right. We won that business against a hyperscaler. And we were.
Sorry, explain what a hyperscaler is for those who are unaware.
The Googles and the Amazons of the world. A lot of these hyperscalers are building their own LLMs. We're not building an LLM, so we're not. These people who are building their LLMs, they don't theoretically want to be in bed with somebody who's also building a competitive product. And some of them also have very strict geographical needs. So, for example, for our first client, they needed it in certain places. Iceland was one of the great places for the fleet to be in. So we provide customized solutions. And when you provide customized solutions, you could charge a much higher margin. It's like when you go into a shop and if you buy a suit off the rack, it's going to be much cheaper than having a customized suit. So this is one of the reasons why these deals require a lot of mental calories to get to closing, because there are so many, when you're doing something that's customized, you're not just selling widgets. Each deal is different. Each client has very special needs, and hyperscalers are not willing really to offer customized solutions. So we occupy a very incredible niche part of this whole ecosystem of offering customized solutions, renting computational power to people who are building AI applications. Hyperscalers don't want to, that's not their business model to provide a customized solution. And so that we took on that space, and we now have a track record. We have multiple clients now, and we have more clients that we're looking forward to announcing.
And going kind of plucking that thread also a little bit as well. This is something that I keep coming back to in our shows because I don't really understand how these compute markets work. I mean, most people don't, I don't think. Obviously, BitDigital is in the weeds, as are a lot of other miners and a lot of other HPC providers. But if I'm understanding it correctly, that depending on the model that is being trained or the compute needed, the pricing structure could be different for all of these different clients. Is that correct?
That's right. That's right. Look, it's purely an HPC services for now. We don't manufacture or sell any HPC related devices, at least for now. Our current business is basically GPU as a service, which basically means renting out computational power to customers. So we do have plans in this business to evolve the business and diversify our offerings, particularly when we vertically integrate. But our medium-term plan is to add a software layer to our offerings to make our revenue even stickier. So we are investing in high-end technical talent. We've just made some very big hires at the C level on the technical side that we haven't announced yet, that we will in the short-term future. But that's going to help us achieve that goal. And our initial goal in this business is to earn brand equity and market share by executing at super high levels. And we think we're doing pretty well in that regard. We do have very big plans in 2025. So stay tuned for that.
And to highlight something here, because I think it's important to put into words, and my listeners are probably tired of me saying this, but with Bitcoin mining, you basically have a single market rate, right, through hash price. Potentially you can beat that market rate if you deliver directly to the Bitcoin network and self mine. Right. But most miners are going to pools, and they are getting paid out per an FPPS rate, which converges on really a single market rate across all the different pools.
Right.
And one of the things with AI and HPC compute that I find fascinating within these markets is there is not a single market rate.
That's right.
Eventually maybe we converge on that down the road, but it's still so early and there are so many different uses for this computing power that you have kind of this kaleidoscope, right, of prevailing market rates that you could pull or that you could basically look through and tap. So I just think that always bears highlighting, and it's part of the reason why not just the fact that the revenue potential for these contracts are high, but also the optionality is very attractive, I would imagine, for a Bitcoin miner.
You have much better prose than I do. You're the way you explain it is pretty nice. But yes, that's right.
I appreciate that. Got to do it. I'm in media, so if I don't have that, I don't have much, Sam. I'll tell you that much. I want to ask a question that we kind of talked about before the stream, and it might go over some of our listeners' heads, but I think it's important to talk about because it's a novel way to finance this, and that's the sale leaseback agreements that you have with your clients.
Yeah.
Can you explain how this works? Because as I understand from the 6K, you financed roughly half of 2 tranches of your HPC computer purchases by selling them and then leasing back that compute. So 2 questions. How exactly does that work? And are you selling it to the tier 3 data center or are you selling it to the client? How are these things structured?
Yeah, it's basically simply a financing transaction. We executed a sale leaseback on a portion of the GPUs on our first HPC customer contract as a means of limiting the capital that we needed to invest in this deal. So basically, we saw a lot of future demand for this client, a lot. It's pretty insatiable. So we wanted to make sure that we preserved capital to fund new customer contracts. So it's basically a diversification and risk mitigation measure. In very simple terms, we bought the GPU servers, then we sold a portion of those to a third party and subsequently leased them back. So we're still in charge of the operational aspects of the contract, and we earn all the corresponding revenue. We just pay a third party a leasing fee for the leased miners. So this decreases, of course, the margin on the contract, but it essentially is a financing tool and preserves capital, and then we could fund the growth for new customers. Without the sale leaseback, the margins would be over 90%. With the sale leaseback, it's reduced to over 60%. Still fantastic margins, but we did that. Sorry, that's my Slack. I will quit the Slack. Apologies.
Thank you.
Yeah, I apologize.
I understand. Happens a lot.
Yeah. Where was I? But yeah, so it did compress the margins a little bit, but it's the right thing to do from a risk management perspective and to preserve capital for future growth on other clients.
Thanks for that rundown. I know we're running up on time, so I just have one more question and then we'll have final thoughts. Would love for you to go into a little more detail with the Boostroid agreement that y'all talked about in your 6K. For some quick context for our listeners, they have an agreement with Boostroid, which is a gaming company, for tranches of like 100 GPUs per allocation, I think up to 50K GPUs. And you're evaluating about 10 different data centers across the US and Europe for hosting these. Can you speak a little bit more about the agreement, and also maybe if you could, within the bounds of what you can disclose, what areas in the US and in Europe you're looking at for those data centers?
Yeah, we're on the verge of, I have to be careful with material non-public information here. We are on the last laps of finalizing the MSA. And so I can't get into it too much. But once we sign the MSA, we will, there'll be a press release and there'll be a lot of information about that.
Understood. So maybe to have another question, does this agreement differ from the ones that you currently have? What are some similarities or differences between this agreement that you're brokering with Boostroid?
I mean, at the high level, it's basically not basically. It's a $700 million contract that has a potential of $700 million contract. We're going to start next month in deploying in deploying this, but it's only going to start about $2 or $3 million this year, and next year we expect to deploy about 30% of that contract. And the contract is over 5 years. That's a long time, and it's nice to have that kind of certainty for half a decade. It is the third largest. It's the third largest cloud gaming company in the world. These apps are going to be found in the back of Mercedes cars. BitDigital is powering this. So I highly do not recommend to play those games while you're driving, but the passengers in the back seats will enjoy the games very much. And so that's going to be put in the models of Mercedes as of next year. And if you happen to have a Mercedes next year and you see the gaming apps on the cloud in the back seats for your kids, guess who's powering that? That's us.
What kind of games are we talking about? Are we talking about like Tetris, Brick Breaker, Fortnite?
That's a good question. I'm embarrassed. I don't know exactly which games. I have to tell you, I used to be really severely addicted to World of Warcraft. And I had to physically remove myself from playing that game because it was destroying my life and I was gaining so much weight. I was basically Cartman, and I don't know if there's this one particular episode.
Yeah, I know exactly what you're talking about.
That was me. And so I was literally 30 pounds more than I am today, and I was eating pizza literally like Cartman. And so I have no addictions, but video games is definitely my weakness, and I had stayed away from video games ever since World of Warcraft. So when I heard about Boostroid and the games, I kind of had like some trauma about it. But I
shivers up your spine.
Exactly. So anyway, this is beyond what your listeners want to hear about, but I do not know exactly which games, and I think I've done that by design. I'm just shielding myself away from video games.
Understandable. Well, Sam, we're going to let you go here in a minute, but before we go, we'd just love some final thoughts from you on the state of the Bitcoin mining industry as it particularly relates to this pivot to AI that we've seen from a lot of the leading players.
I think that it's very important to have options in life. And when you're running a business, I love to have different levers. So I have the Bitcoin mining lever. There's no real barriers to entry in Bitcoin mining except capital. If you have the capital, which we do, we could scale up the Bitcoin mining fleet immediately. But if Bitcoin is not where it needs to be for Bitcoin mining fleet to be profitable, it really is best for a Bitcoin miner to accept that reality and leverage his or her skill set in what Bitcoin mining has given us, which is procuring specialized machines and figuring out the data centers and parking the two. And that's really important. And I would strongly encourage Bitcoin miners to think about that, because you don't want to run a business based on hope. And you don't want to just say, okay, I just hope Bitcoin goes up. That's not a good business to run. You want to definitely win when Bitcoin goes up. But if you could position yourself to also win when Bitcoin doesn't go up, that's really delivering shareholder value to people who are buying your ticker.
We don't want an industry run on hopium, that is for sure. Sam, thank you so much for joining today, man. Appreciate your time. Where can people find you? Where can people find BitDigital? Where can people find everything that y'all are doing?
Yeah, I mean, go on the website, of course, BitDigital's website. And there's an IR email address there, and I actively look at it. So it is my head of IR, and if there's anybody who wants to have questions, and we'll be very happy to engage with people who are asking, appropriate questions. But we can't, of course, give any non-public information.
Don't be like me and press on things that he can't talk about, guys. All right, Sam, thank you so much for joining. We appreciate you, and hope you enjoy the rest of the summit that you're at.
Thank you so much.
That was Sam Tabar, everyone, CEO of BitDigital. Check out their website. You can learn all about what they're doing with HPC and AI. And that's a wrap for today's show. We appreciate y'all tuning in. Be sure to give us a follow at Blockspace Pod and at the Mining Pod, Subscribe to our newsletters on our site, and you can find me on Twitter at @AsILayHodling. And if there are any guests or any topics you want us to approach, let us know, y'all. We are open to suggestions. Appreciate it. Hope everyone has a beautiful day. Stay fun, everybody.